Hello. Good evening. Good evening, all the participants. I welcome all to the webinar series 17 uh, on the internal arranged by the Internal Audit Standard Board. And the topic for the day is strengthening of internal audits through operational risk management. And we have with us the eminent faculty. We are very fortunate to have a very experienced and eminent faculty in this area. I like to welcome CA Apur Mathur on behalf of entire team of ICI. Sir, welcome to you.
Thank you, sir.
And we all are eager to hear to you. And before we start the session, before I hand it over to you, I would like to give the introduction of the sir. Sir is FCA, FA, FD, and DISA with over 16 years of experience in the field of risk consulting and business consulting. He is currently heading the risk consulting practice in AMP and Company Chartered Accountants as a partner for last 15 years. His previous stint was with Ernst & Young in risk advisory services and Sahani Nataraj and Bahal. He has rich experience in the field of risk advisory, internal audits, development of policies and procedures, and internal controls. He has handled internal audits and related consulting assignments in some of the big multinational companies, listed companies in India and abroad also. Apurva sir possesses extensive consulting experience across a wide range of industries, including automotive, information technology, banking, real estate, engineering, home solution, and metal, and etc. As well as, along with this experience, Apurva sir was a special invitee to the Board of Internal Audit and Management Accounting of ICI for financial year 24-25. Currently, he is serving as a Board of Governor of Delhi branch of Institute of Internal Audits. And he is also faculty for General Management and Communication Skills. With this short introduction, Apurva sir, I once again welcome you and request you to take the charge of the session.
Thank you so much, Amoji. I first of all like to thank ICAI and Board of Internal Audit, and definitely Amoji for giving this very pleasant introduction. And I definitely welcome all the participants from across the country for today's webinar on internal audit. So it will be my pleasure to share my thoughts with all of you. And I also request that we all are members, and it will be pleasure for me also to learn from all of you. So wherever you have any queries, please take note of your queries. And towards end of the session, we will be addressing the queries one by one. And we will be very, definitely try to take each and every query depending on the availability of your time. But it will be my pleasure to take everything. So I'll share my screen. Just allow me for a minute, sir. Yeah. So Amoji, just let me know if my screen will be visible so that after that
Yes,
I
yes.
can start. Please let me know.
Yes.
Is it there?
Yes, sir. Now we can see the screen.
Okay, great. Right, sir. So, yeah. Right. So, dear participants, in today's webinar, where we will be covering on the operational risk management and its importance in internal audit, we will be covering basics about what is operational risk management. Basically, it is a very wide term, and we have to break that entire term into that, what are operations, what are various risks in different operations, and what is the term called as risk management collectively when we are using it with operation risk management. And as an internal auditor, how is it important for us, and how we have to use this risk management in operations as an internal auditor. So to start with, as you can see on my screen, these are basic principles of internal audit. Now, I'm sure that we all are knowledgeable members of ICA and we all must be doing internal audit. But somewhere or the other, we need to keep in mind that the basic principles are the first and foremost thing that we have to keep in mind whenever we are doing any internal audit. So as you can see on my screen, there are 10 basic principles which are governing any internal audit assignment. Starting from first, you can see independence, then integrity, objectivity, due professional care, confidentiality, skills, competence, and on sixth, we have risk-based audit. We have system and process focus, participation, decision making, sensitive to multiple stakeholders, and quality and continuous improvement also as others, uh, points in this basic principles. But I would like to keep a focus in today's seminar on only point number 6, which is what? Risk-based audit. Now, as we understand that the basic principles also governs the this particular point and highlighting towards the importance of risk-based review or considering the risk in any process which we are doing audit in any of the assignment. That is why it is very important for us to understand that what is risk management specifically considering into an internal audit assignment. Now, to start with very basics, let us first understand the difference between risk and uncertainty. What is risk? So risk is something, okay, so risk is something which we always talk in a negative manner. Okay, so we don't call any positive event as a risk. We always call any negative event as a risk only. And it is always talked about in terms of futuristic event. So there is always a possibility of happening of that event, which is a negative in nature. That event we call as a risk. Now, risks are measurable. So we have to consider that if any event which is a negative in nature, which is predictable, that means we can predict that this particular event may happen in future and the outcome of that event are also measurable, or we can expect or estimate the outcome of that negative event, then we call that circumstance or that event as a risk. Whereas when we talk about uncertainty, so uncertainty is little different. Now uncertainty is also something which we are calling in terms of some futuristic event, but here the core difference lies that the uncertainty may not be predictable. So we as a human being or the systems computers, we cannot predict that this particular event may happen for sure. Second, that the events or the outcomes of that event may not be measurable. We cannot estimate that what would be the loss that we will be incurring or occurring because of that event if that event happens. So the core or the basic difference between risk and uncertainty is that risk is measurable, predictable, whereas uncertainty is not measurable or non-predictable. So whenever as an internal auditor, we are talking about something which has not happened, so we have to do an internal audit for any procedures or process only. So there we have to assess that what are the risks prevailing in that particular process. Something which is coming under the definition of uncertainty, we may not be the best person to do an audit of such events. Whereas if the such kind of events are categorized as risk, then definitely yes, it has to be audited thoroughly as an internal audit assignment. Now, we have to classify the risk. So there are 4 factors within which we can classify the risk. So first factor is the source. Source means that whether the risk which is occurring in the organization, whether it is an internal risk or whether it is an external risk. Now, to explain further, internal risk could be generated within that organization. So one example could be that if I, as an accountant, I have a responsibility to prepare a purchase order as well as to make a pay to book the vendor invoice and to make a payment to that vendor. So there is a clear lack of segregation of duty assigned to me as a overall function. It is an internal risk because it has been assigned to me, which I'm an internal person to that organization, and the risks are because of that inadequate segregation of duty. This is internal risk. What is external risk? External risk is something which is beyond the control of the organization. So, for example, there could be some change in the government policy which the organization is not aware of. There could be some geopolitical tensions outside the country, like the inter-country wars which are happening in many parts of the world right now. Many of the developed countries are changing their uh, tariffs policies which is impacting the business in some other countries. These are external risks. So how to cater internal risk is a different subject altogether, and how to cater to external risk is a subject which is altogether different. However, in today's discussion, we will keep ourselves limited only to the internal risk, because it is a matter related to operations risk management only. The second factor of classification of risk is nature. Now, risk can be either controllable or it can be non-controllable. Now, controllable risks are those risks wherein we can implement certain controls to mitigate those risks. Now, controls are certain procedures having certain, direct impact on that event or the risk which may happen, and which can control or which may impact that particular negative event or the risk may not happen in the organization. This is controllable risk. So in the example which I gave you just now with respect to segregation of duty, if I have proper segregation of duty, if I have proper IT systems in place having proper access rights available to me and to my colleagues in my company, and one person cannot do the task of any other person, so there is a controllable risk internally within the organization by putting up certain process or some additional controls. Now, non-controllable risks are certain risks which are beyond the scope of that organization, with against which the organization cannot put any additional controls. So these could be, a cyclone may come, some kind of, like pandemic may come across the globe or across the geography in which the company is operated. There are some geopolitical tensions which I've just told you. So all these risks are non-controllable risks. So any business has to live with certain risks which are non-controllable in nature. The third factor is status. Now, status means that some risks are inherent and some are residual risks. Now, what are inherent risks? Inherent risks are some risks which are primarily there in any process or the operations which we are talking about. So be it a procurement to pay function or order to cash cycle, or we call it, say human resource management as, one of the process in any organization, there are some inherent risks in these processes. So any organization, when they are functioning, they have to build certain internal controls against those inherent risks. Now, after putting up such controls, in spite of that, there could be some risk which would be there in that particular process, and the organization has to live with those risks. These are called as residual risk. The residual means that risk will be there in that process in spite of putting up certain controls by the organization. So as an internal auditor, we have to understand, we have to identify during and at the beginning of the assignment that what are inherent risks in that particular process and what are residual risks within that operation. The fourth factor of classification is consequence. Now, consequence could be, many kind of consequence could be there. Like there could be financial risk. Like for example, if any event happens within that organization, so there could be, loss. There could be, say extra cost incurred by the company, or there could be some operations stoppage. Say for example, if we have not done the proper maintenance of machines in a manufacturing plant, then the machines may stop working, and it will impact the operations of that company. If there are some transportation company and the fleet or the vehicles are not being, servicing it not being done properly, or the tires or the engine is not being checked properly, and the vehicle stopped on the road, then it directly impacts the operations of that business. There could be some strategic consequences also, like the business may stop, or the goodwill impact could be there, or say there could be some, statutory non-compliance resulting into some penal provisions from the government. So there could be many or n kind of, consequences could be there if such kind of event, which we are calling at risk, may happen within that organization. So it's important to understand as an internal auditor that whenever we are about to start any internal audit assignment, the risk has to be classified in these factors, and we have to assess that which one are, factoring into the operations risk, so that we can accordingly, ask the proper questions from the management with respect to the operational controls that they have put in. We can ask proper SOPs, we can ask for proper policies in place, and we can accordingly design our testing methodologies while we are doing the check of those procedures. Now, what is operational risk? So as the name suggests, operational risk is always, it always starts when that organization start operating the basic business operations. Now, when I'm talking about, say, basic business operation, that means that there are many business operations within that organization. If a company is, starts operating, now, what are those operations? Manufacturing, the company is producing some products. There are some machineries in place. There is a factory. There is a PB shed. There are some cranes in the factory. There are some, stores are there where inventory is being kept, and store is issuing the material. There are GRNs which are happening for the material which is coming into the premises, and so on. So here, the entire set of operations related to the manufacturing of the company, all the risk related to those functions are being categorized under the operations risk for that company. Warehouse, we are keeping the material, we are issuing the material from warehouse. There are some firefighting arrangements that we have kept in that warehouse to ensure that we have a proper system in place. We have, say, ERP system in place to record the inventory, for inventory receiving, inventory issue, and such kind of things. So here we are, highlighting towards the controls for operations of the warehouse. Trading, if the company is into a trading operations, the company again may not be manufacturing anything, but the company is, taking orders from its customers, buying from some other vendors, storing it some places, and it is dispatching as per the customer's requirement. So uh, all the process related to the ordering to the vendor, taking orders from customers, delivering to the customer, dispatch controls, your, shipment controls, your invoicing controls related to your collections, all these things will categorize under operational risk controls for that company. Purchase, so procurement to payment is a perfect example of this function, where we are calling all the functions related to, or maybe, starting from procurement planning till payment to the vendor. So it has a complete chain of activities starting from purchase planning, then purchase requisition, then purchase ordering, then, a receipt of material from the vendor, then storing that particular material, then, making GRN in the system, then receiving vendor's invoice, booking that vendor invoice in our ERP system, then making payments as per the due date to that particular vendor. So all these chain of activities in the procurement to pay cycle are called under the operation risk control for that particular function. In the similar manner, we have sales, the end-to-end process we are calling as order to cash, where we are receiving orders from customer. We are, channelizing those orders into our company, maybe it manufacturing or maybe it trading. Then we are ensuring that the materials are, readily available for dispatch as per the dispatch schedule. Then we are delivering it maybe on our own, or maybe the customer is putting the vehicle in our premises. Then we are invoicing to that customer. Then we are ensuring that we are getting the collections on time from the customer. So all these chain of activities are categorized under order to cash process. Now, HR and admin is one such support function for operating any particular operations. Maybe it's a manufacturing operations or it is a service industry, but we are having HR and admin operation as a very critical function for ensuring that we have the right set of people in place. We are recruiting on time. We are ensuring that people are getting properly training as per their job responsibility. We are ensuring that we are making the payments to the, our team, like salary disbursement are being done on time. We are ensuring that we are ensuring the regulatory or the statutory compliance with respect to PF, with respect to ESI or Bonus Act or any other, HR and Labor Acts. So all these functions are being catered or handled by the HR and admin team of any company. Supply chain, which is ensuring that we are delivering the material on time, or we have to place our vehicle at some required place, either in our manufacturing facility or the warehouse or at the vendor's premises or at the customer's premises, be it anything. So the supply chain team ensures that our material reaches on time, reaches in the right quantity and in the right quality. So that's the overall responsibility of a supply chain function. Now, when we're talking about any of these, now supply chain function is also a support function for any organization, but it becomes very important to focus on support functions also. Similarly, accounts, so accounts and finance, where we are ensuring that we are booking the bills of the vendors, we are ensuring that we are, that making invoice in the, for the right quantity, right price, and having the right taxation on that invoice to that customers. We are ensuring that we are making the tax payments on time. We are ensuring that books of accounts are being kept as per the accounting standards, and we are closing the books on as per the, statutory timelines. We are ensuring that audits are being done on time. So all these activities within the accounts function becomes the integral part of the the overall function. So now I hope that you understand that when we are talking about operational risk management during an internal audit, so here we are talking about that we need to have a knowledge of all these functions and all the sub functions within that main function also. Then only we will be able to do a proper justification with the internal audit activity when we are delivering to our client. So as I have explained through some examples in the previous slide, operational risks are the risk of losses incurred by the organization resulting from inadequate or failed internal process. So few important words to be highlighted here are that it is a, obviously when we're talking about it risk, so it is a negative event. Second, it is a internal event. So basically any event or any risk which is happening because of internal failure of that organization. That is why we are calling it as operational failures or operational risk. Now, when we are talking about operational risk, it could be inherent risk also, as we have just touched upon in the previous slide. So few points to be touched upon. First, it is an internal risk. When we are talking about any external risk, so we will not discuss operational risk there. Whereas when we are talking about any operational risk during an audit or internal audit, we will be talking about the internal risk within that organization. It will be inherent in nature. So every process has some inherent risk. We as an internal auditor have to identify, have to assess, and have to document those risks. And against those risks, we have to test the controls. Third, it will be controllable. So when we are doing an internal audit, we always focus on the controllable risk only, because the uncontrollable risk in any case will be the risk which are residual in nature, and either management nor as an internal auditor we cannot do anything about on those front. That is why these kind of events which we are categorizing under operational risk are always covered as part of internal audit. Now some of the examples. First, I'm sure that you all must have seen, banking audit, maybe during some statutory audit of a bank or concurrent audit of a bank, or may some internal audit of a bank. And I'm pretty much sure that we all must have seen some CBS system, like core banking system of the company, which is nothing but a ERP system which is used by the bank. So if a bank experience a downtime failure, basically the system is not working and the bank is unable to process the customer's request of, say, deposit of money, or say, cash withdrawal, or say, renewal of FD, or making of LOUs, or making of LCs, or accounting in the system. So if any uh, system of the banking, this CBS system is being or maybe it notice any downtime failure, so it will directly impact the business operations of that bank, because in nowadays, as we all have seen, that the entire operations of banks are done on the computers only. That means that the banking entire end-to-end banking operations are in the systems like ERPs only. So if that ERP system is failed for some time, there is a downtime, though you can imagine that what will be the extent of loss of operations within that bank. Machine breakdown due to poor maintenance of machine, again a very easy to understand example of operational risk. Now uh, I'm again sure that most of us have been fortunate to go into manufacturing companies where some kind of machine breakdown, or the you have seen that there are machines which are not in the working conditions. So because of that machine breakdown, because of poor maintenance of machines, it will directly impact the operations within that factory. That means that if the machine is not working, the factory is unable to produce the FG. If they are unable to produce the FG, they will be unable to dispatch that FG on timely basis to its customers. So a clear example of uh, operational control failures. Third example related to cybersecurity. Now you can take an example of a retail business where we are as a customer going in the now in the retail store, and we are purchasing something. So when we are purchasing something, the concerned store manager has to scan the barcode and he has to record the sales in the system. So if the there is a cybersecurity breach and the system is not working, so if my customer's data is which is my email ID, my phone number, and my name is being taken out from the system, and the hackers are using or passing on or selling that data to some unscrupulous elements of the society. So you can understand the loss of customer trust in that particular brand or the company. So these are few examples where we can correlate that that what can be the operational risk failures uh, or operational control failures within a company. Now, why an internal auditor should know about operational risk? First, I would like to highlight that as a chartered accountant, we may not be acting only as an auditor. Okay, so there could be many chartered accountants working in industry or working in some operations who may be responsible for big bookkeeping, financial management, taxation, auditing, costing, or consulting also. So any of the operations that we are talking about definitely have some or the other operations in place, because when we are talking about bookkeeping, so we will be definitely touching about ERP controls. We need to be touch upon, my team is acquaint about latest amendments or taxation procedures. When we're talking about financial management, so we have to be acquaint about the what are the latest policies available, uh, or the accounting systems in place. So without the core operations, we cannot function in any of these operations. And to know that what are the risks prevailing within that operations or within that sub process of that operations, it is an integral part of, as a chartered accountant, that we should focus upon. But as an internal auditor, we should always be aware about that what are the risks or what are the possible outcomes or events which can be there in the processes that we are going to do an internal audit in that company. Now, when we have been assigned internal audit in any of the company, then you all must appreciate that there would be some scope of work that will be given to us. Within that scope of work, there are some processes that we have to audit. Now, the process could be finance and accounts, the process could be procurement to pay, the process could be order to cash, the process could be HR, the process could be treasury, the process could be supply chain, and n number of process that we can talk about. But every process will have certain sub process within that major process also. So as an auditor, we have to start our audit always by first identifying that what are the sub processes within that major process. Now, within that sub process only, we have to identify the risks which are there in that within that sub process. Those risks are inherent risks within that sub process only. So when we were touching about some examples in my previous slide, so we have touched upon, say, CBS system, we have touched upon machine failure, we have touched upon, say, some segregation of duty failures within that accounting function. So all these examples are what risk within a some of the other sub process within a major process. So I would like to put a question to all of you, that would you like to take your car to a mechanic who does not know how to check and repair engine, but who only knows that how to fix up tires or maybe headlights? but he doesn't know how to fix up engine or the coolant in that engine. Would you take your car to that kind of mechanic? The answer would be definitely no. Why? Because the mechanic of our car, of that workshop, will be, kind of an internal auditor who has to first assess that what are the problems within that car. If there are any problems, that he have to tell to that owner of that car that, boss, in your car these are the problems which are happening. Because of this, you have to do some or the other. Now, we I'm not calling out that, the mechanic is doing some repair, so as an internal auditor we also have to do the repair in the operations. No, our job is not that. But we have to take ourselves as a mechanic who knows how to handle or the operations within that company. So we have to be the process all rounder. That means that we need to have a knowledge about accounts, we need to have the knowledge about taxation, we need to have knowledge about HR, admin, supply chain, FEMA, or labor laws, and the any topic that you talk about. So then only we will be able to justify towards the our role as an internal auditor, so that we will be able to give our proper advice with respect to risk and controls within that company. Now, elements of a function or operation. So as we have already touched upon that, these are some processes which are, internal to that company, and these are some elements which play a critical role while executing any function. So first, people, because without people, no organization in this world can operate. So we need to have the right set of people at the right place. To identify right set of people is again a very important activity that HR or the head of the department have to ensure. Then process are the basic operations that any company operate within that company. So for example, the example that we have discussed in the previous slides, like uh, accounts, or say manufacturing or supply chain, these are some processes within that organization. Technology is a very important element, because without technology we cannot operate in today's world. We need to have the right set of technological tools in place, we need to have the right set of controls. Then statutory regulations, again a very integral part of any company, because any company operates within a statutory regulations or regulatory framework only, be it Companies Act, be it your taxation, be it your HR, labor laws, or any kind of laws of land within which the company has to operate. Then vendors and the customers are some third party who are very much related with us, because from vendors we are purchasing something, and from customers to whom we are selling something. So these are few critical elements which are playing very critical role when we're talking about operations within a company. Now, type of operational risk: process risk, people risk, system risk, compliance risk, external events risk, which are impacting our own operations, okay, but which are somewhat controllable in nature, regulatory risk, fraud risk, reputation risk, vendor and third party risk, business continuity risk, product risk, physical security risk, or environmental risk. These are few examples only. We cannot call these risk as exhaustive in nature, but based on the experience, we can note down certain risks which could be there inherent in any some or the other business operations in any of the company. So as an internal auditor, we need to first assess that what all business areas that we are going to audit, what are the risks which are prevailing, and under which category or the type of risk we can categorize those risks. It should be internal, it should be inherent, and it should be controllable. Then only we can, as an internal auditor, we will be able to do the audit. Can test the controls to mitigate those risks. This we have already talked about, so I'll not be able to. So I'll now move to this slide. So people risk are, it is a very integral part of any business organization, because you take any company, either it is a small company, medium company, or it is a large company, if it is a manufacturing company, or it is a service based company. We need to have the right set of people with required skill set, qualification, and experience at the right place, because without people you cannot operate machines also, you cannot do planning, you cannot do accounting, you cannot do manufacturing, you cannot do supply chain, and the company cannot operate. We need to have the people at the right time also. If there is a delay in appointing a person at the right place, then or definitely we are losing on time. If we have the people, we have the people on time also, but the people don't have the required skill set. That means that they don't have that required experience or the skill set to perform that role or the task. Again, we will be losing out on that particular front. We have the people, but we are not providing the required resources or the tools to that concerned individual. So the resources or tools means that there could be required, machinery could be required, some IT infrastructure could be required, some trainings could be required to perform that task. If we don't provide some resources or tools which are required to conduct that task to the people, then again we will be losing out on the business operations and the risk will be open. Now, as an internal auditor, we need to assess whenever we are doing an audit whether the people who are assigned a particular task in the operations are, do they have that required skill set in place? Because many a times management are dependent on our input, that whether our people in the company are, matured enough or have the required skill set to perform the task. What is your view as an internal auditor? Do you think that we should hire more people? Do you think that we should give proper training to the people or not? So all these questions comes when we are discussing as an internal auditor with the management of any company. Second, process. So process is nothing but the set of defined procedure of conducting any activity. So we have the accounts payable as one of the process of finance and accounts. We have accounts receivable also. We have banking operations. So accounts payable has a end-to-end process of booking the vendor invoices, making the vendor payments, doing vendor reconciliation, doing balance confirmation from the vendors. Accounts receivable have process of making invoices to the customers, then checking and follow up of overdue sales receivables, then collection monitoring, it's accounting. When we're talking about banking operations, so we have bank account operations, which is say opening of bank account, closing of bank account, making any amendment in the bank, then payment through bank portals, then accounting of banking transactions, doing BRS on timely basis. So these are some sub processes of finance and accounts function. So it is integral for any internal audit activity that we need to be very, very particular that what are the sub processes within a major process that we have been assigned as part of the scope of work. Because if we leave any sub process, for example, if I will be assigned an internal audit of finance and accounts and I skip checking of banking operations, then I may not be able to justify with my duty or the function, because I have left a particular sub process altogether, and by leaving that particular sub process, I may not be able to comment on the risk or the controls which are prevalent in that particular sub process. So it's important that we should know that what are the sub processes which are covered as part of the major process. Now I'll touch upon one such example of uh, you know process failure or operational risk, which is which you all can correlate with some or the other example that you have also read. If you have not come across this kind of error, it will be a good thing for you to know. So a fat finger trade. So fat finger trade is what? It is a kind of error in the trading activity because of misclicking of mouse or mispunching of a key on the keyboard. So that means that I want to put a trade in the system. Trade means that there is a trading on the market that is happening, and there is a trader sitting on the computer screen. It is getting some orders and he has to execute that order on my computer screen for the clients. Now, for say I have to punch 1000, instead of 1000 I have put 10,000, or maybe I have put 900. Okay, or I have clicked that the execution button and the order has been executed. So because of putting up one extra zero, I have either executed the trade for an incorrect quantity. That could impact my clients, the money also, because there will be a huge loss which can happen. Now, if you do some research on your own also after this webinar, you can just search for a real life examples of fat finger trade happened in the global market. You will have n number of examples that you will see, because such kind of event were very common in last few years. Typically, when we did not have the right set of automated control in place, or the segregation of duty concept came, but fat finger trade occur due to various reasons. Basically, it can be an accidental also, because that say I am very fatigued, I am distressed, or my able to not able to concentrate on my work, and because of 1,000 I have incorrectly punched in 10,000. So this could be one of such reasons. There could be some technical glitch also. So because the software is not functioning properly, and because of which there could be some missed trade which has happened within that ERP system, and it has resulted into a huge loss for the customer. Now, the company or the entity may not have the proper risk management system in place. Basically, even if the person accidental, or even if there is a software glitch has happened, that particular incorrect trade, but the system is unable to catch hold of such kind of trade. So that means that there is no, capping on the trade which can be done by an individual. So, for example, if there could be a control which we can suggest to any company in such kind of activity, that your one individual cannot put a trade exceeding say $1 lakh. So even if I want to incorrectly I've punched it 10 lakh instead of 1 lakh, so system will not allow it, because there is a limit fixed up in the system that a single individual cannot execute order more than 1 lakh. There could be some maker checker controls which a company can execute for high volume of transactions, or maybe the transaction which are of a very high value in nature also. So if there is a maker checker concept in place, then there is an individual who will be executing the task in the system, and there will be another senior or another individual who is reviewing that, and who is giving a go ahead or approval in the system to execute that task. Next, the trader has to be given the proper trainings also. There should be proper, SOPs in place, policies should be defined, and the proper experience should be available with the concerned individual to execute some such kind of task. Then high-speed trading environment can increase the risk of fat finger trades in general common parlance, because the traders may not have time to double check what they are punching. So that is also a one such factor why such kind of events have happened in the past. So I request you to maybe you can also Google it, and you can just search that what kind of fat finger trade losses have happened in the global market, and it will definitely be a good learning for all of you. Next, technology. Now, can we imagine that in today's world any business can operate without technology? Can we imagine that? I very it's very difficult for me personally to even imagine about that, because nowadays so we our life or our day starts from smartphone, our the entire day spent on the laptops, and we close our day again with some smartphone only or the laptop. So end to end our operations, be it your personal operations or your office operations, have been moved on the technological platforms. Now, you can imagine any company where the business, the either Microsoft or iOS, whatever the application the company must be using, they stop working for say 4 hours. Can you imagine that the business operations impact that the company will have, because the entire operations of say accounting, your sales invoicing, if the ERP gets stopped, or the booking of vendor invoice payments, if the banking system gets impacted. So that is the extent of risk if our technology system goes for a toss. So it is very important as an internal auditor for us also to keep a very detailed eye on the technological risk also. And when we are going as an internal auditor in any company, then what are the required controls that the company has put in place against those risks? So we may not be the technological experts, but yes, basic and certain knowledge about the technology and the corresponding risks and controls has to be in place to perform that audit in a better manner. How many of you have used AI till date? Is there anyone? I really doubt that any person in today's environment is untouched from AI. And the person who is not using AI may not be the efficient person that we all, because everyone we are talking about that, everywhere we are talking about that the AI will not take the job, but the person who is not able to use AI will be out of the market. So everyone has to be on using the AI in some way or the other. But do you think that there are any risks due to usage of AI also? Do you think, or AI will be, we can easily adopt and there will not be any risk because of usage of AI? Yes, as an internal auditor, I can see that there are many risks when we are, the company or the business people in the company are using and dependent on AI, because now people are blindly dependent on the AI, that whatever the input that AI is giving to them, they are blindly using it and they are, executing their own function. Whereas many a times we have seen that AI is only giving you some generalized information, we may not be customizable as per your requirement, till the time you have not giving the proper prompt or the customization to your AI bot. But certain level of HI, that means human intelligence, is definitely important whenever you are, automating your tasks through AI. So yes, AI is very helpful, but again, yes, AI will come with some risk. So when we're talking about the technological risk, we have to talk about the AI risk also. And in due course of time, you will definitely going to see that there will be a lot of webinars or the seminars or the sessions which will be happening when we will be touching about that how to audit in a AI environment also. Because usage of AI is one thing, but how to audit in an environment where many of the tasks are being done by AI only, because there the end-to-end task will be automated. There will be, hardly any, manual task which will be available for you to audit. So how we can audit in such environment? If there is an incorrect input given to the AI, so there will be an incorrect output provided by AI for sure. So we, as an internal auditor, we have to keep in mind whenever we are going as an audit in any of the organization, that what are the extent of AI usage in that organization, so that we can be well versed about that risk related to that AI. If you have any doubt, please feel free to take note of it, and towards end of the session we will be touching upon all the points and the questions and the doubts. Now, laws of land. Now, many times, we hear from the in the internal audit fraternity that, we have read only the, the Companies Act or the income tax or the GST or the FEMA related compliance only during our CA curriculum. Then how we will be versed about the other laws, like, banking laws or labor laws, environment laws, or, some municipal laws. How, the organization should, what do you call as that, they rely, or they expect that a chartered accountant should know all these things. But the answer is that when the person is appointing us as an internal auditor, they are not only appointing us for conducting the audit, but we are being appointed as a consultant also. And any organization expects that the internal auditor should be well versed with all the regulatory framework related to that business environment in which he is doing the audit, be it your FEMA laws, be it your environmental laws, be it your, the labor laws or banking laws, if it is a bank, or NBFCs, or what kind of legal regulations which are applicable on your client. So understanding of that laws of land is very, very critical in nature, and we need to be, very well proactive while for understanding the laws and to do a compliance audit also. This is nothing new to us now. Although the word is new tariffs by USA, but this term is not new to us. Everyone in India is aware about this thing. So do you think that when the US government has notified that new tariffs on India on the goods, so do you think that there was some turbulence in the Indian market? There were some lot of discussions which are happening. All the news channels were flashing those news only. And do you think that there was some impact on the Indian businesses also? Impact is what? The risk, again risk, because it is a negative impact. So definitely the answer will come as yes only. Why? Because if the tariffs in the USA have increased and the goods are going from India to US, although the activity is not in the control of Indian companies, that is why we will call it as non-controllable. It is outside the organization, so it is not an internal risk, it is an external risk. But yes, the laws of land, we have to be aware of that. What are the tariffs which have been changed? What are the goods which are impacted because of that regulations? So that according to that laws of land, we have to adopt ourselves also. We have to change our system. We have to be well versed of that foreign laws also when we are doing business operations in the global market. Recently, this news came 2 days back only, changes in H-1B visa provisions and the related cost of applying that H-1B visa. I'm sure many of you are aware about H-1B visa. H-1B visa is the visa which is provided to the professionals who are working in United States of America. And there was a cost of say $1,000 earlier, before this was before Saturday, which has to be paid at the time of applying for that H-1B visa by the companies who are recruiting any foreign nationals for their US operations. Now that cost has been increased from 1,000 to $1 lakh, so 100 times cost increase. So $1 lakh which has to be paid by the company who is uh, you know employing any foreign nationals for their United States of America operations. So now the kind of increase in that cost or the changes in the provisions, which is a regulatory changes which has happened in a foreign land, but there is a direct impact because there could be many IT companies. There will be many manufacturing companies who have some setup in US also, who were about to send their candidates maybe on Monday, Tuesday, or they were about to apply for their H-1B visa because of their US operations. But because of that, 100 times increase in the cost, do you think that they were very easy with that decision, or they must have revisited their decision, and they must have gone to their internal team and management, and they have revisited their thought? So the answer will be yes, definitely, because the change in the foreign laws have directly impacted the working capital of that company, because now they cannot afford to apply the H-1B visa in bulk like they were doing earlier. So, and their business operations in the US must have been impacted because of non-availability of the required workforce from India or from any part of the country. So, this has a major impact on the business operations because of change in the foreign laws of land. DPDP Act, how many of us are aware of DPDP Act? Like, this is Digital Personal Data Protection Act. Now, Digital Personal Data Protection Act has been launched by Indian government last year, wherein the act is specifying that controls and the measures or the process which every data collector, personal data collector, has to operate or has to have that in place to safeguard the personal data which has collected. So it is a kind of very, very major amendment in the IT regulations in the Indian business scenario, because a lot of companies, before that, would like to ask a question, that how many of you have or you have in past, or you receive, or in today's also time, you get calls from banks that do you need a loan, or credit card companies that do you need a credit card, and you take a pause for a second and you realize that I have not shared my number with any of such kind of companies, that from where they have got my phone number. Now, your phone number is a personal data, and the companies or the call centers who are calling you, they are taking your data from somewhere else. So the somewhere else could be any, either a retail shop from where you have taken your, say, mobile connection. There could be some hotel or restaurant where you have given your mobile number in the register, because many times when we go in a restaurant, they ask your name, they ask your mobile number, and they enter in the register. They could have taken your number from there also, or from any of the online portals where you register yourself while taking a subscription of any application, or any login also, you put your phone number or email ID, and that personal information is being taken away by such kind of people, and they use that information for their business purpose. So all such things have been banned under the Digital Personal Data Protection Act. Now, any business who are taking personal data in India need to be aware about all these changes in the regulations, because if any individual who is aware about all these regulations, and if that individual get to know that I have given my information to this company and this company has leaked my information outside, so there is a penal provision which is calling for a penalty of up to 200 crore. The kind of the penalty which is there, a hefty amount of penalty. So the company will definitely have to tarnish its image or the goodwill, or they have to make that penalty amount to that individual for leaking that information. So because the company may not be aware about that, what are the provisions which are to be complied with. So the as an internal auditor, we need to be aware of that these are the changes in the regulations which have happened either in India or outside India, and it is directly impacting the business operations of this client. So accordingly, we can give our assurance on the regulatory risk of that company. third party vendors or customers. Now, again, these are risks which are related to your involvement of either vendor or your customers. Now, one such very easy to understand example is that there is a loss or delay in production due to stoppage of vendors' factory operation. Now, uh, during the COVID times, we have seen a lot of business operations got shut down. Now, that was because the vendors on whom they were relying, their business operations got stopped, because of which the main company which is supplying or which is taking the inputs or the raw materials from that vendor, that company also has to suffered because of that stoppage of the vendor's business operations. So now, the risk could be non-controllable in the nature of that particular risk by the company, but the company can mitigate that risk by employing more than one vendor, so that your the business operations may not suffer if your one vendor gets out of the business, because you have some other vendors available for supplying the material to the factory. Similarly, there could be an inventory accumulation within the company because there is a change by the customer in its delivery schedule. Now, if there is a change in the customer's delivery schedule and the customer tells to the company at the last moment that please don't dispatch my consignment now, please delay it for say 15 days. Now, the company may have already your production planning for next 15 days. They may have planning for their warehouse operations for next 15 days. They may have planning for their dispatch for the next 15 days. But if one customer delays its delivery, then you can imagine the impact on the production cycle, on the warehouse operations, and the impact on the business operations only because of the change in the customer's planning. So I request that you all, whenever you go for a next audit in any of our client or any of our companies, you just see that are there any material on which there is a single vendor dependency by that company. That means that you just take a purchase dump for 1 year and just have a revisit on the material items or the item codes, that how many item codes are there which have been bought by only from one vendor during the entire year. That means that the company has a single vendor dependency for that particular material. If the company has a single vendor dependency, then you can definitely suggest to that company that please don't be dependent on one vendor. You need to have multiple vendors for one material. It always helps for a better negotiation also. It always helps whenever that vendor goes out of business or it has some turbulence in its business operations. Then the business operations of the client will not suffer. Next, process level risk management. So as we all have seen that what are the processes in the previous slides. So process level risk management is what? It is a risk management where we are assessing or identifying the risk under each process and sub processes. So now remember the example of that car. So you take the car as a whole company. Now the company may have many processes, like finance and accounts is one such process, human resource is one such process, procurement to pay is one such process, supply chain, order to cash, production. These are all what? Sub process, major processes. Under major process, you have many sub process. For example, accounts payable, sub process of finance and accounts. Accounts receivable, sub process of finance and accounts. Recruitment, sub process of HR. Training and development, sub process of HR. Full and final settlement, sub process of HR. Invoicing, customer invoicing, sub process of order to cash. Customer collection, sub process of order to cash. Production planning and control, PPC, sub process of production. Booking of production in the system, material consumption, bill of material, all these are sub process of production. Now, again, coming back to our example of a car, you have engine. Okay, engine is a major process because engine itself is an assembly of various small tiny items. There could be some relation with the software of the car also. There could be some liquid which has to be filled up to operate that engine. There could be some hardware which is there in the engine also. Engine is what? A collection of sub processes. Similarly, you know operation of tires. Operation of tires is a major process. It is again a collection of major some sub processes. Like there is a core tire which is there. There is a rim which is there. The tire is connected with axle. Then the tires are connected with brakes also. So all these are what? The connecting processes, which macro level, they are called as a sub process. So again, as I have just spoken about in the previous slide, that whenever we are going as an internal auditor in any of the client place, then we need to understand that what are the major processes, and under or within that major process, what are the sub processes that we have to touch upon. We need to list down all the sub processes within that function, and we need to get a confirmation from the respective client also, that are we not missing on any particular sub process, or we have covered everything. And against those sub process only, we have to do that risk management activity as a next course of no course of action. So in the process level risk management, as I've told you, that there are some process, there are some sub process. Within that sub process, there will be some inputs. Inputs are what? The activity or a data or an information, basically, based on which certain event or action which has to be taken up by the executor or person who is executing that task. Then once that task has been done, there will be some outputs which will be done. So I'll take some very basic example of bank reconciliation statement. Okay, now bank statements which I'm downloading from the bank portal is an input for me. Then I have to do an accounting of that bank statement in my books of accounts. So I have to update my bank ledger. Once so input is what? Bank statement. Action is what? Accounting of the banking transactions. Once I do that, so I have updated my bank GLs. Okay. Now at a month end, I will do a bank reconciliation statement. So what I will do, I will tally my bank ledger with the bank statement, and I will see that whether all the entries have been properly accounted for or not, or are there any gaps. So this is a perfect example of there is an input. There are some actions which are being done based on the input, and there will be some output which will be generated after execution of that task. So whenever we are doing a process study for conducting an internal audit, we need to identify that what is an input, what is an action, and what will be the output. Corresponding to that, we have to identify the risk, which we call as a risk management activity. So here we have to first identify the risk. We have to assess the risk, that how important or how critical that risk will be. So identification will be based on your previous experience, based on the past audits that have been done in that company or in other companies, based on the research that you will do. Because this is somewhat similar to an example of a policeman. So if the policeman does not know how a thief can do a theft in a company, the policeman won't be able to catch that thief. Okay, because police has to think from the thief's mindset also, that the thief will do may do this kind of activity. The thief must have gone from this lane. The thief must have used this kind of operations, or this kind of tools and techniques. So accordingly, the police can do that particular checks and balances to identify that who is a thief, and to again catch hold of that thief. So as an internal auditor also, we have to keep in mind that what can be the things which can go wrong in the organization, and how that things can go wrong also. Accordingly, you can bank on the controls which have to be tested, and you can check, and you can give assurance on the internal controls mechanism in that company. Now, let us understand the steps in the process level risk management. First is the listing down of the process and sub process. Then we have to do a deep dive analysis or the understanding of the process. Then we have to do a risk identification. As I've told you in the previous slide, that identification of the risk is what? Identifying that what can go wrong within that major process and within the sub process. Then we have to do an assessment of that risk. Assessment means that what is the likelihood of occurring of that event and the impact which can happen. Accordingly, you have to classify the risk as high, medium, or low, because you have to keep focus on the high risk items. Then you have to keep a focus on the medium risk item, and accordingly you have to keep a as per the time availability, you have to check the low risk areas as well. Now, I'm sure that most of you have heard about the term as risk control metrics, RCM. So risk control metrics is a detailed Excel or list down of the activities that we are talking about here. So here in the risk control metrics, we take note of all the processes that we are reviewing during part of that assignment. What are the sub processes? Within each sub processes, what are the risks which can happen? Against those risks, we have to assess the likelihood or the impact of that risk also. So we have to classify the risk into high, medium, and low, depending on the severity. Then once we do that, after that, we have to define the what are the controls which are existing to mitigate those risks. And we have to test those control as part of the internal audit assignment. So this is a comprehensive framework that we prepare as part of our internal audit engagement, and we do a testing of that as part of the assignment. So internal audit risk assessment we have touched upon in the previous slide. So we will not be touching upon this thing again. Risk assessment. So there are ways and means of risk assessment. So very easy to understand example I'm putting up here. So here, as part of the risk library, there could be some numbering from 1 to 5 that you can do based on the impact. Impact means that what is the extra cost or the excess cost which the company may be incurring because of happening of that event. Then likelihood that whether that event has can happen once in a month, once in a quarter, once in a year, or once in 2 years, 5 years, and accordingly you can give some ratings, and a multiplication of that or factor of that you get a risk score of that particular risk. So the higher the risk score, the more severe the risk will be. So you have to categorize the risk according to that risk score, and you need to focus on that risk score according to that severity. So this is a perfect example that how impact table can be prepared, how likelihood table can be prepared. Now, many a times we, as an internal auditor, we also get some assignments from the clients for doing the risk assessment activity for their various process. We may not have to do a thorough proper internal audit, but we may have to do a risk assessment. So risk assessment we can do in such manner also. I'm sure this will be helpful for all of you. The numbers may change because the values, a quantity factor, financial impact values which I have given here are only an example, and the values can differ depending on the size of the company, depending on the geography, depending on the scale of operations. Similarly, likelihood also may change depending on the scale of operations, size, and many other factors also. But the methodology of computing the risk score may remain same. I'm sure I'm making some sense. You can please take note of your questions if you have any, and we can take your questions towards end of the session also. Now, when we're talking about all these things, like, we're talking about operation risk, we're talking about operation risk failure, we're talking about internal audit in all this domain. We cannot leave this example from our study. Now, it's a perfect case study for any internal auditor. I'm sure you must have heard about Bhopal gas tragedy, which happened in India on 3rd December 1984, which was a very, very tragic incident which happened and which took the lives of thousands of people in Bhopal, and very, very tragic accident which seen by the country. But it actually gave a lot of lessons to the internal audit fraternity also. So let us see that what happened. So there were approximately 40 tons of MIC gas, which are very, very toxic gas, which leaked from that plant which was there in Bhopal, and it killed thousands of people. Uh, the event happened because there was water which entered in one of the tank which was storing the MIC gas, and when the water, the chemical reaction, the chemical composition of that particular gas was such that if it becomes come in contact of water, then there will be a leakage of that gas, and a lot of it will impact if we as a human being we inhale that gas. So the pressure built up and caused the release of 40 metric ton of MIC gas, which escaped into the air and spread across the nearby residential area. So a lot of control failures were there. If you are not aware of that, there is a series called as named as The Railway Man, which is there on Netflix also. And if you have not seen this, I request you please visit and you can just see the Railway Man series. It's a perfect case study for internal auditors also because the series perfectly depicts that what happened, what went wrong, what were the control failures on part of the company, who were the whistleblowers within that company also, who were continuously blowing the whistles because of that control failures, but the management of the company had ignored, and the risk were continuously being ignored upon, and that there were no internal controls which were exercised by the management of that factory. And it also showed that the impact which has happened because of that gas leak within that factory and the nearby residential locality also. Now, key factors of leakage was, although it is a little technical in nature, so we will not go into detail, but very basics that there were neglected maintenance. That means that the maintenance was not properly done and it was continuously ignored. Second, safety measures failure. So there were some safety systems in place installed in the factory, but they were all failed. So they were not operating when that particular gas was leaked. So there were some refrigeration system which was supposed to work when the water entered into the tank, but that refrigeration system was not working. There was a flare tower which was supposed to burn off the escaping gas, but that flare tower was not working. There were some warning sirens which was supposed to blow out, because the warning sirens installed at the factory premises and outside the factory premises, they were not working. So people in the residing area, they were not aware of at all that there was some accident happened in the factory. So a clear failure because of negligence in the operations. Overfilling of the MIC storage tank. Because of overfill, so from the manufacturer or from the installer side, there were guidelines that the tank was supposed to be filled only up to 50% of the capacity. Because if even if such kind of event happened, that there was there should be a sufficient space within that tank to, so that gas should not escape or outside the tank. But they were overfilled up to 80% of the capacity, because of which this accident had happened. Water entry into the tank, which was a very, very major failure on part of that overall operations. Now, these were the factors which led to that accident, but what were the operational controls which could have prevented that disaster? As an internal auditor, we need to understand that there should be a proper maintenance and testing of safety system. So if the company would have been operating properly, they should have a preventive maintenance checklist in place. They should have a preventive maintenance team who are continuously responsible for checking and maintaining the every mechanical and electrical equipments, whether they are working properly or not, and they are keeping their records properly. Strict process control, that means that persons who are accountable for any process operations, there should be a uh, no failure on part of that process operations. So people should be very much trained that you have to conduct that task in that design manner only, and training should be given to that individuals. Safety protocol should be followed by the company. Community awareness was missing. So community awareness means that the company where the factory is residing, the residential area is there near to that factory location. The people should be aware of that in case of such kind of accident or incident, what are the steps or actions that the people have to take, so that such kind of activities or the people can save themselves. Regulatory oversight, so a clear negligence on part of the management, and safe storage practices which were clearly neglected. So these are some operational control failures on part of the management of the that company, because of which that accident had happened. So if you go into detail about that Bhopal gas tragedy, that what went wrong, what were the control failures, what was the whistleblower activity, and all these things, and then you will definitely understand that this is a typical case study as an internal auditor, and which should be implemented whenever we are going for an internal audit in any of the manufacturing operations. Now, coming on to the people risk is somewhat related to the human error. Now, it could be uh, intentional also, it could be unintentional also. Intentional, then it will come under the category of fraud. Unintentional, then it will come under the category of a, say lack of awareness, lack of proper systems in place, lack of controls are there, proper maker checker systems are not there. So any kind of event which can happen because of this will fall under the people risk category. So there will be multiple controls which are to be operated by the company to mitigate such risk, like providing proper training to that individual, ensuring that there are no competency gaps ensuring that proper systems and controls are available, like ERP controls are there, segregation of duty is there, proper roles are defined for that individual to handle that task. There is one maker, there is one checker for that particular task, so that one person cannot do everything on his own. So all these controls, if implemented properly, will be able to help and mitigate the risk related to this particular topic. I'm sure you have heard about this fraud, Punjab National Bank, Mr. Nirav Modi case. Now, Nirav Modi scam, which happened few years back in India, is again a typical case study of people risk. Here, why? Because first there were some individuals of the bank which were involved with that concerned individual, Nirav Modi, to issue some fake LOU. Because of fake LOU, the LOUs were not entered into the CBS of the bank. Again, a failure on the part of the bank because there were not proper internal control mechanism. The system were not designed in that manner that the and every or each and every LOU has to be entered into the CPS system. Then again, kind of a segregation of duty failure on part of the company, because most of the tasks of preparing LOU, approving LOU have been given and assigned to some individuals only, and they were unscrupulously they were using that fake LOUs, issuing that to this individual, and this individual is again using it outside India to get loans from foreign branches of other Indian banks. So again, a typical case study of what kind of people risk could be there and what could be the extent of the people risk. Now, whenever such kind of events happen, then such kind of events are not be unearthed on a short-term basis. Basically, such kind of thing, because this fraud was happening from so many years, and after few years only that they were being caught, and the extent of loss, it was humongous, like more than 10,000 crores. The PNB had to pay to the foreign branches of Indian banks because the PNB was acting as a guarantor. But that was the extent of loss the bank has to suffer. So you can imagine that what is the time period for which this kind of risk was there in the banking system, and no one was able to catch this control failure. Now we will not go in detail because of the uh, shortage of time that we have, but I request that you please do your own research on that scam, so that that becomes a case study for us when we are going as an internal auditor in any of the company. Now, system risk is what? System risk related to the ERP system, IT systems, okay, the applications, okay, the related to the cyber security, related to the business operations of which may impact because of IT outages in that particular company. So all these things are very important for us as an internal auditor to understand, because you know if we don't see that what are the different controls which the company has implemented as part of that IT system risk control, then such kind of things which had happened in the AIMS few years back uh, could happen in any of the company also. Now you must have heard that in AIMS there was a cyber attack few years back, and because of that cyber attack there were a lot of IT outages which had happened for few hours in AIMS. And because of that IT outages, you can imagine the kind of the operation stoppage which has happened, because the hospital was not able to uh, work for few hours because of that IT outage. And few hours in the hospital, which is that size of AIMS and that kind of in the capital of India, you can imagine the loss which has happened. Now, VAPT, vulnerability assessment and penetration testing, is one such, audit, or one such kind of testing which is being done by people who are, who have knowledge about the IT risk and IT controls. And VAPT audit is specifically focused to identify that are there any gaps in the system, or the cyber security, or the your virus antivirus system, or your firewall protection system, or all these things. So VAPT testing will bring out all such control failures, and what all measures the company has to adopt to mitigate those system risks. Regulatory risk we have touched upon in the previous slides. So I don't think that we need to go into detail. It is nothing but related to the regulatory environment in which the company is operating. Nowadays, a lot of proactive compliance monitoring systems are there. So company are again not depending on the individuals. Rather, the companies are taking a lot of compliance ERPs which are there in the market and which are proactively guiding the companies that what are the compliance risk the company is exposed to, and if they are complying with that regulatory requirements or not. If they are not complying, then what is the risk on which the company is setting up. So we as an internal auditor should be aware about all these. First, the compliances which has to be followed. Second, if the compliances are not being followed, then what will be the risk uh, for that company, and what is the suggestive suggestions or the suggestive measures from our side to the company also. Business risk is again a kind of a high level risk in case of any disaster or any kind of IT outages that we have seen, because it will impact the continuity of the business for some time. It could be permanent or it could be temporary. In both way, we can call it as a business continuity risk, because the operations of the company will suffer for some time. Generally, as part of the entity level risk, when we are discussing on internal financial control, we cover business continuity risk, because a lot of these mechanism that we are talking about, like disaster recovery plan, or your to safeguard your supply chain disruption, what are the activities that we have done or implemented in the company, they are covered as part of that entity level risk, because we don't want as a business operations that that the entity should stop their operations. This is one such example of business operations failure for some time because of the IT outage, blue screen of death. You can take note of this particular example, blue screen of death, and you can do your own research. We may not be able to go into detail for this particular example because of paucity of time, but in brief, I will explain you that in 2024 July in United States there was some IT outages in the Microsoft system, because of which a lot of business operations which were dependent on Microsoft, they had to stop their operations for some time. And it one of the core industry which impacted because of that IT outage was the airline industry. So a lot of airline industry were purely operating on Microsoft, and because of that blue screen of death, which there was a error of in Microsoft's Windows only, they had to stop their boarding operations. They have to stop their the flights takeoff and all these things. So because of that, there was a worldwide havoc across the world, because a lot of passengers were halted on the airports only. So what went wrong? Inadequate software testing, insufficient communication protocols, limited staff training. So you please take note of all these things, that all these things are somewhat controllable in nature. If the company would have thought about these kind of attacks, so company would have been done a proper software testing before launching, because that happened because of a bug in the software. There was no cyber security attack, but it was because of a bug in the latest software which the Microsoft had released few hours back only. So there was inadequate software testing. Communication protocols were not proper, because the team who had released a new version of the Microsoft may that there was some kind of communication protocol failure on internally, because of that this happened. Then the staff was also not trained properly to handle such kind of IT outage if this of this extent and this nature. Now, moving on to the next type of risk is a product risk. Now, product risk is somewhat related to the products which the company is producing. Now, when we are talking about a product, it is a finished product that a company is selling in the market. So either it is related to the quality of the product, or either related to the design or the regulatory penalties for non-compliance or unsafe products which is rolled out into the market. As you can see on my screen, so there was a product risk which happened in few years back, like 10 years back. It was called as a Dieselgate, because of Volkswagen had to recall a lot of units across the globe. Now, why it happened? That is because of a deceitful software that was installed in over 11 million diesel vehicles worldwide, and a lot of vehicles were being recalled when this particular thing was caught, and a lot of regulatory non-compliances was unearthed, and the company was penalized by the regulatory authorities across the world also because of this activity. But a typical case of product risk, so mitigating controls should be that should be a strong whistleblower mechanism should be there, because this kind of event or this kind of activity cannot be done by an individual. It must be involved by a lot of group of individuals in the company. Then there should be a proper internal audit system, independent audit of software, emission performance, stricter testing protocol should be there, and proper transparency, integrity, and accountability within that organization should be there. So some of the controls should be, could be internal. Some of the controls could be, say, external in nature also. When we are calling a product is in such this example, all the risks were internal in nature only, and because of that uh, deceitful software only, that particular thing has happened, and the company has to face that backlash. Now, physical security risk, we all understand, and we all have seen this example in our life. 9/11 attack, a perfect example of physical security, where the terrorist had attacked the twin towers in United States, and a lot of people have lost their lives. So basically, when we check in into a hotel, we have seen that a proper security guard checks our vehicle, checks the bags that we are carrying in the on the airports. Also, we have seen that our luggage is being scanned properly. We have to go by the frisking machines also. So it's a typical example of the controls which are exercised to mitigate the physical security. Yes. So physical security risk, because what went wrong, that there were some intelligence failures, there were some airport security failures which were there, because the terrorist had, definitely they must have entered in the airplane in some of the airports only. Then there were some failures on part of the existing policies which were not sufficient to address the evolving nature of terrorism. So again, a lot of policies and the internal measures and the security measures were strengthened after this attack. So naturally, when we're talking about such kind of wind, there could be some operational controls which could have been impacted. So again, we don't want to go into detail of that. So these were some examples from the real life only. Now coming over to some examples of risk and control failures. Uh, Now, these are some examples which I will be touching upon, will be from some of my real life internal audits that I have performed in past few years. Without taking the name of the client, without taking the name of the industry, I'll be discussing some of the examples so that it becomes easy for all of us to understand that what are the risks in such kind of process, and what could be the controls, what could be the possible audit checks also. And these are all related to the operational risk only. So very much related to today's topic. So first, this is related to the production management. Now, a typical example of production risk would be that there are some high machine running hours in comparison to low output. That means that at one side we have low output from the operation of the factory premises, and at the other side we have low output at one side, and the high machine running time. That means the machines are running for 8 hours, whereas I'm not getting the desired output. Output is very low. So this is a tip of the iceberg, because when we compare the data, data of output versus machine running, so we got to know that machine's capacity is to produce say 100 units in 1 hour, say for example, but the machine is unable to produce 100 units. Machine is producing only say 70 units in 1 hour. So when we went into more detail, so we found out that machine preventive maintenance was not conducted properly. There were inefficiency in the machine operations. There were inadequate machine operation training to the operators. So there were three root causes which came to know, because of which are resulted into this particular observation. First was preventive maintenance was not done properly. So if you don't do preventive maintenance of that machine, so naturally the machine may not be able to perform in the desired manner. So there will be low output. Second, inefficiency in the operations. So the operators who are working are unable to perform efficiently on the machine. So many a times there was seen that the machine operators were not handling the machine in the right manner, because of which the machine is not able to perform properly, and that was purely because of inadequate training to those operators. So now you can understand that there is a operational risk which is related to operational risk related to the machine preventive maintenance or training or handling of that machine, impacting what the output of that machine, which is a major audit observation. Now, what could be the preventive controls that we can suggest to the client if we find such kind of anomaly or the gap? First, that there should be compliance with the preventive maintenance schedule. So it is a very very important activity on part of the maintenance team, that you cannot, ignore the preventive maintenance schedule. It has to be done in any manner. Second, regular machine operations training. So basically, the trainings to the machine operators should again be a very, very important affair, and we should not be ignoring those aspects. Third could be a detective control, that there could be a daily or weekly review of standard versus actual plan. What is the standard plan? What versus what is the actual output? And whenever we are finding any deviation, we need to do a RC kappa, basically the identifying the root cause and suggesting the control, corrective and preventive action for that deviation. So if we are implementing these controls in that organization, we can definitely management can uh, get an assurance that yes, my machine will be operating effectively in future due course of action. Now, key data to check, maybe a kind of suggestion to all of you, that whenever we are doing this kind of audit, we need to do certain, checks and balances for some data. So we have to check the machine logbook. We have to check the production data which is captured in the ERP system. We have to see the PPC data. We have to see the preventive maintenance schedule. We have to see the maintenance logbook, and we have to see the training record. So we have to see a lot of data independently, and we have to integrate when our workings to come and to arrive on a single conclusion of this audit observation. So it's a typical example of, considering operational risk during an internal audit. Second, high rework, rejections, and overtime. So when this is again a typical example of a manufacturing industry where we identified that there were high reworks, there were high rejections, and there were high overtime in a small span of time in the factory. So we cannot conclude because we were not finding the right root cause. So we have to go a little deeper. So we found out that there were frequent changes in the conveyor belt speed by workers during the night shift. So what happens that the factory has to operate in three shifts, A, B, and C. So whenever there are three, the night shift, that is the third shift, the conveyor belt was not uh, operating or in the desired speed. There was the speed was a little slow in the night shift. Now, because of that slow speed, we found out that in the third shift, the production was not done as per the plan. So basically, the actual output in the third shift was lower than the planned output. Because of that, the other shift like A or B shift, they have to speed up their work. Now, to speed up their work, there were high rejections and there were high rework. And to again to make up the loss of production of third shift, they have to run the plant on overtimes also. Many times on Sundays, many times on holidays also to make up that loss of production. So what could be the possible internal control that we can suggest to the client in such scenario? First, preventive control, that could be that access controls over the changes in the conveyor belt speed can be limited only to the, say, shift in charge or the head of production of that facility, and it should be accessed only on the controlled environment only, not accessible to everyone. Second, detective control could be that there could be a weekly review of the conveyor belt speed change log also. When we did this audit, there were no log available. So what we had to do as part of the audit procedure, we have to do a shop floor visit during night, during A shift, B shift also. We have to record the time which is required to pass from one part of the plant to second another part of the plant by that conveyor. So we assess that what was the speed on which the conveyor was operating. Because of that, only we able to identify there were amendments or changes in the shift, the conveyor belt speed by the night shift personnel only. Moving on to the next example, this is spike in customer complaints or warranty cost. Now, when you analyze the data related to the customer complaints and you see the warranty cost, then you found out that there were a lot of customer complaints in a one particular audit period, and the warranty costs are also very high. So now you cannot stop your internal audit at this level because you have to go a little deeper to identify the root cause. So what we found out was inadequate quality checking products of RM, WIP, and FG. So we found out that the quality checking mechanism was not proper. We found a lot of FG batches. We found out a lot of WIP and RM quality checks were not being performed. Because of that, the defective material or the material not at the right quality went into the market, and the customers raised a complaint and there were under warranty products again came back for the repairing work and replacement. So a typical example of internal control failure. Uh, what could be the internal control that we can suggest to the client? First, stringent quality checking procedures. Second, regular quality audits. Because regular quality audits, if any individual or a person independent from the operations, if it performs that thing, then it will be very helpful for the company. Now, to perform this audit procedure, what were the data? So we checked warranty cost ledgers, we checked the customer complaints data, we checked the QC records, quality check control record, we checked the RC kappa process, we did a surprise checking at the quality control area to check whether there are intentional addition of defective item in WIP, to check whether QC will hold such items or not. So what we did as part of the surprise audit check, we took a permission from management and we intentionally put some defective items into the checking line, and we wanted to know that whether the quality people will put that defective items out of that whole lot of items to be checked or not. And to our surprise, our defective items were passed by the quality, and we that gave an assurance that the quality team was not able to perform their task in the desired manner. So that raises a question on that internal control or the processes that the quality team was following. Again, a typical example of operational risk within that major process of quality control. Next, lower inventory turnover ratio. Now, this is again a typical example of an audit observation that you find out whenever you are doing any inventory management internal audit. Now, in an inventory management internal audit, we always do a check on the inventory turnover ratio. Inventory turnover ratio is nothing but a the ratio the times that inventory turns over in the company. So that gives an confidence on the operations or the cycle of the inventory movement within that company. So when we found out that there was a lower inventory turnover ratio, so the root cause that we found out was excess purchase of material leading to inventory accumulation. Now, although the observation was related to inventory, but it raises a serious question on the procurement planning of that company. So when we found that the purchases were done in excess of the inventory requirement. So now inventory requirement should arise from the procurement planning, which should be dependent on the bill of material, which should be dependent on the production planning, which should be dependent on my sales planning. But the company has did not had the right controls on all these aspects, which resulted into procurement as per the experience of that individual only. So the individual who was responsible for raising the purchase order, who that individual was raising PO based on its experience, not because of the based on the data, which should be dependent on the sales plan, production plan, or your bill of material, which eventually led to that inventory accumulation. Now, what could be the internal controls that we can suggest to the management? First, the company should have safety levels. Company should have reorder levels for running stock items. So safety levels and reorder level means that reorder levels are those level when an inventory reaches at this level, so it automatically triggers a purchase requisition within that ERP. So that is why it is called as reorder. Whereas safety levels are those level with below which an inventory should never fall. In addition to it, we can also suggest maximum level. Maximum level means that any level beyond which the inventory should never go into that company. Second, there should be a regular review of purchase, consumption, and closing stock. Since the company ignored the regular review internally and they were only relying that an internal auditor will come, say, at the end of the year and it will check, so definitely that will not suffice the purpose. Because of that, ignoring the internal review mechanism, that had eventually led to that audit observation. Third, monthly review of inventory turnover ratio. It's a very basic check. If the management does this kind of monthly review of inventory turnover, will definitely let to know that are we on the right track or not. Because many times just a basic check of on the ratios only will help the management to identify the gaps and to plug the gaps on the timely manner. Now, what were the data that we checked? First, we checked the purchase requisitions. We check the reorder level, that whether the reorder levels were properly defined or not. We check whether the inventory aging records also leading to my accumulation of inventory. We check the inventory turnover ratio, which ultimately led to this audit observation. So again, collecting the data independently and analyzing the data in an integrated manner will help us to arrive on such kind of audit observation. But most importantly, we need to see that are we able to identify and assess the risk properly within that major process, which is inventory management, and minor process of say inventory procurement or inventory issue. Next, a typical example of scrap sale. Now, we found out that there were some errors in the scrap sale, high scrap sales versus sale and production. So, we found out that when we compared the scrap sale data with the sales and production during a particular 2 or 3 particular periods, so we found out that the scrap sold during one particular period was very, very high in terms of quantity and in terms of value also. So we found out that they had the incorrect scrap sale price, incorrect scrap sale quantity billed, and delay in scrap sale proceeds collection also. So we found out that because of all these incorrect data captured into the system, that had resulted into the this kind of output of scrap sale versus production or versus sales also. So to arrive on it, what the data that we check the bill of material. Bill of material is nothing but data which will give you that how much quantity is required of each raw material to produce one set of output. Then we had to do a surprise visits at the scrap yard to check at different intervals that what is the scrap quantity which is being shown in the ERP versus what is the actual scrap quantity which is being there at the site. Then we had to see the surprise checking of the scrap loaded vehicle also. So this is a kind of perfect surprise check where we had to stop a scrap vehicle which is moving out of the premises, and we have to unload the scrap and check whether there are any good items are being loaded and being dispatched from that vehicle or not. Then we have to see the scrap payment records also, and we have to check the accuracy of the scrap payment records, weighing scale. And so what are the internal controls basically, which we can suggest to management? First, approved scrap sale price from the management. So every time we suggested that every time the scrap sale prices should be approved only from the authorized person from management, and the concerned person who is the executors has to make an invoice based on the approved sale price only. He cannot change the price while raising an scrap sale invoice. Second, recording of scrap generation and scrap sale properly in the system. Maker checker control, segregation of duty. That means the person who is weighing is not responsible of preparing the scrap, is not responsible for selling the scrap. Then reconciliation of scrap generation versus scrap sale quantity on a periodic basis. So that this is a kind of detective control, because even if such kind of errors have happened, that could be easily identified on a periodic basis, so that necessary controls can be implemented on a timely manner. Next example, ghost employees. Now, this is a typical examples of any human resource management function. The ghost employees means that here we're not calling about supernatural powers, but we are calling about that you are releasing salary for peoples who are not existent in that particular company. So uh, uh, you know, you must have heard about the typical case of Satyam. So Satyam was a typical case study for such kind of internal audit observation, because there were a lot of ghost employees which were there in the system, and for which the salaries were paid by the company, and they were taken out. The money was taken out from the company's data gradually. So to catch hold of all these kind of audit observation, we need to see that are there any deductions which are happening from salary? Are there any employees who are not taking any leaves during the entire 1 year, 2 year? Are there any people or the employees who have the exact same punch in or punch out times every day? Are there any person who is not punching the data in the punching their cards or biometric in while they are in the canteen? Are there any person who has no attendance in get together or office parties? Because if there is a ghost employee, so that person obviously that particular employee ID will not have the punching in the canteen, will not have the punching in the office get together, attendance during the office get together or office parties. That person has not marked any leaves also during the year. So these are some red flags which highlights that there could be some cases of ghost employees. then there will be some other additional audit checks that we have to perform to find out such kind of audit observations. What could be the internal controls that we can suggest to the management? Preventive control. So first, authorization controls, that maker checker control, SOD in employee master updation. So the employee master is a very critical element in the employee ERP, which the company cannot, just give the access to anyone in the company. There should be a proper maker checker control to update and employee information in that employee master. Detective control that we can suggest to management can be weekly reconciliations of different data, as mentioned in the highlighted in the red here. Then there could be a suggestion from our side like auto alerts from the system based on the predefined rules to highlight such cases. For example, if there is no, if there is any person who has not taken leave from 6 months, please, give such kind of alert to my head of, say, finance. So this kind of system alert can be there from the system itself. So these kind of things we can suggest to management for implementing either as part of manual control or as part of system-based control. Now, one such example in procurement to pay could be bribery payments or kickbacks by the supplier. So kickbacks means that we are giving favor to one particular vendor by taking that vendor on board, and in return, that vendor is giving me a certain commission as kind of kickback to me, who is a purchase guy, and that purchase guy is that is taking as a bribery. Now, several concession to the supplier by procurement staff is a red flag. Early payments to that supplier in comparison to the other vendors is a red flag. Buy more than the required quantity, especially from that supplier, is a red flag. Independent quotations from other supplier not taking or inadequate measure while we are doing that technical or commercial comparative, these are also a red flag. So if there are some such kind of red flags during an internal audit, so you can arrive on some conclusion that there could be instances of such kind of kickback by the supplier. So a more detailed descriptive audit checks could be required to prove such kind of things. Now, there could be some internal controls which, as an internal auditor, we can suggest. First, preventive controls, authorization controls could be there, that only an authorized individual can talk to the vendor, only an authorized individual can do vendor onboarding. Then maker checker controls. Then some preventive control with respect to proper SOPs in place like RFQ, receiving quotes, opening and analysis of the quotes by independent people. Then detective control like periodic audits. So these kind of controls as a part of internal audit activity, we have to suggest to the management to ensure that such kind of things may not happen in future. So maybe we can have some questions. Amoji, if you have any questions from any of the participants, I'll be very happy to answer that, because now I am through with my presentation and I am sure that people have some questions.
Yes, sir. I'm just going through the questions, and if they
Yes, sir.
right now sir, sir, I would like to ask one question, sir, to you.
Yes, sir.
Basically, sir, you talked about various aspects of the operational risk management in the internal audit. Sir, can you talk about, sir, when organization is growing from a medium scale to large scale, and
Yes, sir.
they don't have generally proper systems in place,
Right,
uh,
sir.
how to handle such this kind of clients, and as a CAs, what advice we should give to these clients, sir?
Okay. So, sir, nowadays, a lot of companies, especially we have seen such kind of, things where the second generation entrepreneurs are taking up their family business, because now the second generation want to rely on technology. They want to, take funding from outside. They want to expand their business. So this questions mostly comes from there only, where the earlier generation have taken up their business up to this level. Now the second generation wanted to take from here to this. So there our importance, or our role plays a very important role. So first suggestion that we give is that we should never first we have to make them aware that these internal audit and internal control is not only for the big multinational companies only. internal audit should be an activity which they can also adopt, maybe not annual basis, but a quarterly basis. May not be that exhaustive, but a small pockets of internal audit can be covered. Say, for example, we can cover procurement function in one quarter, sales function in another quarter, supply chain in another quarter. Then during audit, all the observations that I've shown you, sir, the examples, they were typically from the SMEs only, sir. Now, not multinational companies. So
Yes.
basic internal controls should be there, sir. Either it is a, say procurement. So naturally procurement has to be backed up by a technical evaluation, because many times the owner may not be involved in evaluation. It has to relying on a manager who is working from 25 years in that company. So he says that my manager is 25 years in my company, so I have full faith. Now the person who is having a full faith only do that, unfaithful activities. So
Yes,
there
yes.
we have to break that, thought.
Yes,
So
yes, sir. Yes, sir. Correct, sir. Sir, basically, sir, Purva sir, it was a very nice session from your side. And really, actually, it was not only theoretical discussion, but in the second part, you really touched upon the numerous cases, not only
yes, sir.
few cases, and
Yes, sir.
numerous industry-wise cases where we can practically correlate
Correlate.
your theoretical first discussion in the second part with the practical aspects of the production, transport, maybe banking aspect.
Yes, sir.
And so it was really eye opener for everyone. And definitely, whenever we are conducting any type of such audits, now it will be helpful to all of us. So you talked about the various type of risk. You talked about the use of technology. Even you talked about the AI, sir. How to even you talked about the sir understanding the law of land. You talked about the people risk involved in the people involved in this entire process. Sir, it was very much eye opener, as well as it was expanding our own ideas and how we can conduct the audit in a very better way in the future. With this, sir, yeah, with this I thank you, sir, on behalf of internal audit standard board, sir.
Thank you, sir.
Myself, Amod Bhatte, I sir, and on behalf of entire team, I thank you once again. And it was really eye opener and full of knowledge session. And with this, sir, I express my vote of thanks. Thank you, sir, for your discussion on this topic.
Thank you, sir. It is my pleasure. And definitely, I really love to be with you and to interact with you and to interact with all of the participants, sir.
Yes.
Really nice of you. Thank you so much, sir.
Thank you, sir. Thank you, sir. Thank you, sir.